Hey there, it's David Cinelli here, broker with Royal LePage Signature. It's springtime, which means that there are a lot of cold and flu bugs out there just trying to get you sick. And unfortunately, those cold and flu bugs hit the DC team. So you're going to have to deal with just me today, so bear with me. Let's look at the market recap for March 2022. In this past month, the market still had some highs and it was a still strong seller's market. But when you compare it to February, there were some changes. So let's get to the numbers and see what I mean. This March, we saw almost 11,000 sales, which was a 29.9% decrease from last March, which was the most amount of sales for the month on record. If you look at overall sales, however, this past March was the third highest amount of sales we've had, and it was the second most amount of sales we had in the first quarter on record. The one common theme you've heard us chant over and over again the past number of months is that we have a lack of inventory. This lack of inventory is causing prices to increase rapidly. Well, there is some sort of good news. This past month, we had around 10,000 active listings, which, yes, it was a decrease of 4.1% when you compare it to March of last year. But we're up when you compare to February's amount of active listings, which had a critically low number of 6,985. This spike in active listings this past month gave buyers more choice. With more choice and other factors, such as the first interest rate hike we've had since 2018, having some buyer fatigue, those buyers just getting out of the market because they were sick of losing in bidding wars, as well as the Ukrainian war, were all factors which led to a lot less upward pressure on price. March's average sale price was just around $1.3 million. And yes, if you compare it to March of last year, it was an increase of 18.5%. But if you compare it to February of this year, it was a 2.6% decrease in average sale price. And let's be honest, usually February has a lower average sale price than March. Is this a trend we're going to continue to see in April and May, the rest of the year? We're not sure. All we know at this point is that maybe the average sale price might be leveling off. Let's break down the average sale price of all the major home types across the GTA. If you are looking to buy a home in the GTA, a detached home will cost you around $1.7 million. A semi-detached will run you around $1.3 million. Townhouses are hovering around the $1.1 million range. And the most affordable option here in the GTA is a condo. And if you're looking to purchase a condo, the average sale price is around $800,000. Now, looking at the returns across the GTA for all major home types, all had double-digit returns. Again, that's across all the GTA, which includes the 416 and the 905. However, if you want to look what's happening a little bit deeper in the markets, if you separate the 905 from the 416, and especially in the detached segment, you will notice there's a little bit of a different story to be told. In the 416, the average sale price of a detached home increased about 9.6%, whereas in the 905, the increase was 24%. Now, overall, this is some trend we're continuing to see over and over again, which indicates to us that, and which we've probably known before, the Toronto market, which is a mature, older market, tends to be less volatile than the surrounding neighborhoods. Historically, the Toronto market has been able to weather the storms of extreme highs and low pricing. So if you are a buyer looking in a really hot market, you also have to look at the history of the area you've been in. If there has been high fluctuations of between price and not able to weather the storm, this may be a critical point for you whether you want to purchase in that area or not, as if you're only going to hold on to it a short period of time, that property, you may lose money, unfortunately. But let's be honest, at the end of the day, real estate is always supposed to be a long-term investment. We're not really supposed to get caught up in day trading, as you call it, or trying to flip properties. That's the time when you do that, you may be exposed and may lose a lot of money. So if you follow my advice, please purchase real estate for long-term investments, 5, 10 years, etc. And if you do that, you won't be losing money, or historically you haven't lost money. If you are thinking of making a change and you want some help, I'd love to be able to help you. Please feel free to reach out. You can always call or text me at 416-876-9998 or email me at dcinelli@royallepage.ca. Have a wonderful day. Bye for now.